Good morning. This is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Now, what I'd like to talk about this morning is the change in the market trend. I believe right now, actually, the market has resumed into an uptrend. I'm going to call it a cautious uptrend, and I'll tell you why. So we take a look at last week, a really interesting week, even though it's a holiday week. What we saw is the Russell 2000 closing at a new high. And that again indicates to me that risk is on. You had it, the microcap index, if you look at the iShares IWC, also hitting new highs. Now this is happening while the S&P was still struggling right about at a 50-day line, but you have these sort of risk-on assets, the smaller capitalization sort of always viewed as the more speculative type of stocks, hitting new highs. So this is good going for the market forward. The same thing happened on the S&P 600, which is a small cap index, also hitting new highs. Now on Friday, the S&P finally got over its 50-day moving average, which was its point of resistance. The NASDAQ was pretty much above this line also. Now, the NASDAQ also has been leading the market. You know, most of the year, NASDAQ been slightly lagging the market, and that sort of made it a little suspicious. You know, you had your money was flowing into the more premium stocks, dividend-paying stocks, and now that whole thing is shifting, meaning it looks like the market's chasing risk. Now, the reason I'm still calling this a cautious uptrend is that one of the things that's missing is volume. We haven't had any big volume rallies, and that's what you always want to see at the start of a rally, sometime in a rally, where the market breaks away about a 1.5% and is higher than the day before. We still haven't seen that. Maybe we'll see that this week, but going forward, it looks like the market does want to run higher. Now, the S&P, if it holds the 50-day moving average, is about 1621. We're all above that. That should be good for the market, and even if it holds a 1600 level, that should be good. The NASDAQ also, nice thing about the NASDAQ, it broke a descending trend line. It had you draw a trend line across the tops that it recently made. Friday, it broke through that. So again, NASDAQ holds 3450. Looks like this market's ready to go. Now, a play I have for you is a stock I've mentioned before. It's in the 3D printing spaces. There's a few stocks in this space. One is called 3D Systems. One is Stratasys. One is X1, and all of them, make prototype models for 3D printing. Now they got a push from Microsoft last week, and Microsoft said in Windows, the new Windows software, they're going to come out with software that's going to complement these 3D system makers. So these stocks have been acting very well, bouncing around their 50-day moving average. So if you look at 3D Systems, pretty much it's been holding pretty tight right around the 45 level. On Friday, had a nice pop off that 50-day moving average. It's trading right around 47 today, so you can buy that in these levels, 47, 45. It's going to hit some resistance, maybe at about 52. If it can break to there, you can add on it there. Now, if it fails below the 44 level, the trade may not work, but for now, I think you can play this bounce, play it off that 50-day moving average, and it's viable right here. As always, let price and volume be your guide. This is George Kachuk with RCM Wealth Advisors reporting you from the CME Group trading floor in Chicago.